Hello, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is November 2nd, 2025, and we are breaking down the USDCAD currency pair, which is sitting at a fascinating crossroads. First, let's dive into the news, because the fundamental picture is driving a lot of this price action. The primary theme right now is a major policy divergence between the U.S. Federal Reserve and the Bank of Canada. While both central banks recently cut their interest rates by 25 basis points, the market's interpretation of their future plans has been starkly different. The Fed, led by Jerome Powell, has signaled a more hawkish, wait-and-see approach, dampening expectations for further rate cuts in the near future. This has provided significant strength to the U.S. dollar, with the DXY index pushing towards the key 100 level. Conversely, the Bank of Canada, while also cutting its rate to 2.25%, has indicated that this level might be about right for now, suggesting a pause in its easing cycle. However, this is set against a backdrop of a struggling Canadian economy. Recent data showed an unexpected contraction in Canada's GDP, and the unemployment rate is currently at a four-year high. This economic weakness is a major headwind for the Canadian dollar, or loonie, as it's often called. So, to summarize the news, we have a fundamentally strong U.S. dollar due to a relatively hawkish Fed, pitted against a weak Canadian dollar suffering from poor economic data, creating a strong bullish case for the USDCAD pair. Now, let's see how this narrative is reflected on the charts. Looking at the daily chart for USDCAD, we can see a very clear and powerful uptrend that has been in place since the major lows we saw back in September around the 1.306 level. Since then, the price has climbed steadily, making a series of higher highs and higher lows. The rally really accelerated in late October, which correlates perfectly with the central bank meetings we just discussed. That divergence in policy provided the fuel to push the price aggressively towards the critical 1.4000 psychological barrier. You'll also notice some days with extreme volatility and massive wicks, such as on October 25th and November 1st. These suggest moments of flash crashes or intense, albeit brief, selling pressure before buyers stepped back in to resume the uptrend. Let's focus on the key levels that are defining the current price action. The most immediate and significant resistance is the zone between 1.4000 and 1.4050. Price has been testing this area repeatedly over the last few sessions, as we saw with the highs on October 30th and 31st. A decisive daily close above this 1.4050 level is what bulls are waiting for to confirm the continuation of the uptrend. If we can break that, the next logical resistance target mentioned in market analysis is around 1.4080, followed by a more significant zone near 1.4170. Longer term, the highs from late 2024 near the 1.4400 to 1.4460 area would come into focus as a potential ceiling for this entire move. On the downside, we have a very important pivot and support zone identified around 1.3881 to 1.3900. The market has tested this area multiple times, and it has held firm, reinforcing its strength. If sellers manage to push the price below this key support, it would be the first major sign of weakness. A break below 1.3881 could open the door for a deeper correction, with the next major support area not appearing until around the 1.3832 level, which would invalidate the immediate bullish structure. Let's switch to the 1-hour chart and zoom in on the price action since the end of October to get a better feel for the current battle. Here, we can see the explosive move up to 1.40 followed by a period of consolidation. The price has been chopping back and forth, largely between 1.3930 and 1.4010. This type of sideways movement after a strong rally is typical and suggests market indecision. Traders are essentially in a holding pattern, waiting to see if there's enough bullish momentum to break the overhead resistance or if sellers will take control and force a pullback. The pair is coiling up for its next significant move. Now, drilling down even further to the 15-minute chart, we can see this indecision on an intraday basis. Notice the tight range and lack of any clear, sustained direction in the most recent candles. The price is hovering around the 1.3980 to 1.4000 area, with buyers and sellers evenly matched in the very short term. This reinforces our view from the hourly chart. The market is waiting for a new catalyst. This could be a major news release or a technical break of the wider range we identified. So, let's go back to the daily chart to put it all together and discuss our potential scenarios. To recap, the critical resistance level to watch is the 1.4050 area. The key support pivot is down at 1.3881. Our primary or bullish scenario is based on the strong underlying fundamentals of a robust US dollar and a weak Canadian economy. Under this scenario, we would expect to see a breakout and a daily close above 1.4050 in the coming days. If this occurs, it would likely trigger the next leg up, with initial targets at 1.4080 and then the more significant 1.4170 level. Given the fundamental tailwinds, I would assign this scenario a likelihood of about 65%. This view would be reinforced by any further weak Canadian data or hawkish comments from Fed officials. Our secondary or bearish scenario involves a failure at the 1.4050 resistance. If buyers cannot break through, it could signal exhaustion and lead to a reversal. In this case, price would likely fall to test the 1.3881 support pivot. A break below that level would be a significant bearish development and would suggest a much deeper correction is underway. I'd place the probability of this scenario around 35%. This could be triggered by surprisingly strong Canadian data, a dovish shift from the Fed, or a broader risk-on sentiment in the market that weakens the US dollar. Things to look for in the coming week will be any speeches from central bank members and key employment or inflation data from both the US and Canada. Before we wrap up, it is crucial to remember that this video is for informational purposes only and should not be taken as financial advice. Trading involves significant risk, and you should always conduct your own research and consult with a professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next analysis.